Hey everyone! In speaking with a range of commercial real estate investors over the last few weeks, I've noticed an interesting divergence of opinion. When asked whether the market's near bottom or if it's time to buy, different types of investors gave me very different answers. When I spoke with institutional investors, those operating major investment funds, most of them told me that they believe the market still has a ways to go. They think prices are still going through a correction process, and they believe pricing could fall another 5 to 10% this year. Many of them indicated that they plan to sit on the sidelines for a while longer. On the other hand, when I spoke to private investors, they were generally more optimistic. Most of them said they're not trying to time the market. They see the current pricing as a discount from where things were, and they believe the underlying commercial real estate fundamentals will improve in the coming years. There are definitely challenges and headwinds, but they're sharpening their pencils and they're taking lots of swings at deals in order to land at least a few that will deliver results. These investors are more focused on where the market will be in 5 years. Several told me that if the deal pencils today, or if it's even close to a break even right now, it only gets better over time. And they believe they'll be able to refinance when interest rates go down. I also spoke to several investors who are selling properties. One investor told me that even though one of his properties is profitable, it just hasn't met his expectations. So he's selling it to free up the capital, then he plans to reinvest that money into a different property with more upside potential. I've also spoken to a few institutions that are choosing to sell properties because they're not generating the desired results. They're basically clearing off their weakest assets so they can redeploy that capital and bolster their overall yields. But the root of this conversation boils down to one question. Has commercial real estate pricing gotten close enough to its floor to generate buying opportunities? Depending on the property type and the market, prices have come down by 5 to 30%. And in some cases, buildings are being sold on a price per pound basis. A notable example of this is the 44-story former AT&T tower in St. Louis. Back in 2006, that building traded for $205 million, but it just sold for about $3.6 million. That sale's obviously an outlier, but older urban office towers in many markets do still face significant headwinds. For other property types like apartments, we've seen the greatest price softening in the metros that were priced most aggressively in 2021 and 2022. Several of those markets have seen cap rates increase by 100 to 150 basis points over the last few years. But properly priced assets are still getting strong activity. I recently heard about a large apartment complex that had 43 offers and sold at a 5.5% cap rate, well below the current lending rates. So that's a negative leverage deal that went through. Another interesting property type is industrial. Although there's a broad consensus that industrial will likely outperform over the long term, the significant wave of big box industrial development has dampened investor enthusiasm. But on the other hand, small to mid-sized infill logistics space in growing metros has faced a highly competitive bid climate, and that property subtype has seen very little value erosion. So, have prices bottomed? Maybe, at least for some property types. Pricing on unanchored retail centers, as well as neighborhood and community retail centers, appear to be nudging higher. But it's still too early to tell if this is a bump in the road or an actual transition point. Likewise, some types of industrial property and some apartment markets appear to be back on the upswing. That said, interest rates could still play a significant role in pricing trends. If interest rates rise, it could once again stall investor optimism. If interest rates fall, investor competition may heat up. But the real question investors should ask is whether the deal pencils over the hold period, what the deal looks like in 5 years. Because at the end of the day, investors need to keep their eyes on the horizon.